Well, on Monday night, Canadians decided ushering in a fourth consecutive Liberal government led by Prime Minister Mark Carney. And a lot of people are trying to figure out what the market outlook from here looks like in light of the political realities. Joining us here in the Global X studio is Chris McHaney, the Executive Vice President of Investment Management and Strategy. Chris, it's great to see you.
Good to be here.
And it's been a busy week, and I know people are talking about the political stories that come from this big decision. But on the market side, what have you been watching?
Yeah, it's interesting that in the immediate days after the election, the market's really almost shrugging off the result of this election. We saw very little movement in interest rates. Equities were maybe slightly positive, so we can say there was not a negative reaction for sure to that result, but not quite very positive either. Hard to say why that is, but there's a few reasons behind that potentially. First is that maybe the incumbent party is still in power, and so there's a little bit of a status quo element to this election result, so maybe markets just taking that in stride. Also the fact that it looks like there will be a minority government, so maybe a little bit of uncertainty as to what policies the Liberals will be able to pass and get through in terms of what they've promised so far. So maybe a little bit of wait and see from the markets from that perspective. But also another potential reason is just that the markets think US trade policy is going to dominate what happens here in Canada. And that's really the big thing that's going to move markets one way or the other. And so kind of sitting on the sidelines until we see some news in that area.
That's helpful context. And if we think about the lead up to the election itself, obviously the situation in the US was front and center for so many different voters and arguably influenced the outcome of the election. But on the road to Election Day, there were so many economic issues that were also lurking, and affordability, you can go on and on. At the end of the day, what were some of the economic issues that you think influence this vote?
I do think really that US trade policy and really more broadly just US relations really drove this election, and Canadians concerned with the perceived threat to sovereignty here in Canada. And really, I think Canadians voted for the party that they believe can lead and unite Canada going forward. If we look at what happened in Quebec, Quebec voters largely moving away from voting for Bloc Québécois, that more regionally focused party, obviously, and supporting a bit more of the Liberals in terms of that result. Even, the NDP getting relatively few seats, and other parties like the Green Party and the People's Party in the past getting 5% of the vote really did very little here in this election. So I think that's telling me voters are moving away from voting for regional concerns, and in this election voted more for national concerns, and again for that party they think can really lead the country. Now, it was very close, of course, Liberals and Conservatives both getting a lot of seats, and in fact I think about 90% or more is going to go to those two parties. And we'd have to go back 25, 30 years to see an election result that had that many seats concentrated among those two parties. So again, I think voters coming together and voting for what was in their best national interests.
And it's interesting, we have a minority government situation, and when the markets react to an election in the United States, just as an example, sometimes they think when you have a divided Congress, let's say, that gridlock is good, that can be good for the markets. This is going to be a bit of a complicated story, again, because if the election outcome was meant to have a united Canadian front to deal with the situations in the United States, a minority government, it's a bit of a complicated story.
Yeah, it certainly is, and I think there's an element of checks and balances to your point about, a divided Congress in the US, a minority government with largely two parties containing most of those seats, I think could do well for Canada in the sense of, you only need a few votes from the other side, from that sort of opposition, in order to get a consensus, in order to get things passed through. And so I think there is the opportunity for the Liberals to work together with the other elements and the other parties in order to get things done.
I want to also just talk about how the markets are interpreting the opportunity, let's say, that comes post-election. And there's probably a couple of avenues to explore here. I mean, one is so much of this election was about how Canada can grow its economy. What can we do if we're looking for other avenues of growth beyond our relationship with the United States? But then there's always the classic, hey, there was an election. What does that mean for this sector or that sector? Do you have any early thoughts on any of that?
Yeah, and again, with the minority government, it's kind of hard to tell, what policies are going to get put in and what sectors may benefit or may not. Given Mark Carney's history, and some of the things he's sort of promised, we can think there will be investment in that sort of renewable energy sector, things like electrification technologies, battery technology, things like that. He talked about building out an east-west electric grid, so to speak. So I think you'll see investments in that space, infrastructure and industrial type companies potentially doing well out of that. And going back to what Canada has a lot of, commodities, right? The other thing the Liberals promised was to build a lot of housing, or to help build a lot of housing. And so that takes inputs like timber, it takes metals and things like that. So something that Canada is very rich in, but I think could potentially benefit from some of these promises the Liberals have made.
And we should probably also point out that when you just look at stock market performance this year, before we had the election, even though there's been so much turmoil associated with where our economy goes, the Canadian stock market has actually been outperforming the US market, arguably ironically this year.
Yeah, and I think some of that has to do with the last couple of years, where we've come from, right? We've seen the US market move up very strongly the last 2 years, led by those technology-oriented companies, things that Canada doesn't have a lot of. And so Canada did not participate in that movement upwards in terms of the equity market. And so now that we're seeing a softening of that sector in the US, Canada's not immune from that, but certainly a little bit more insulated and performing much better, as you said.
When it comes to the economic numbers, that also arguably is a bigger part of how markets react versus, let's say, political votes themselves. And we just got some new economic numbers in Canada this week, which would imply that the tariff worries are already taking a bite out of our economy. If you're trying to figure out which economic data points are going to be the most important ones to watch to try to see where Canada's economy heads from here, what would you be watching?
Well, you have to look at the labor market, of course. I think a lot of the threat that U.S. trade and tariff is giving to Canada is around that manufacturing sector, the autos and things like that, things that we export to the U.S. Obviously, those sectors are a bit more under fire than others. And so, looking at our factories being shut down, are they being temporarily closed? Are workers being laid off? That's going to start to feed into a weaker overall economy if we do see that starting to happen. And that will lead, the GDP numbers that are a bit more backwards looking, but will tell us, are we still growing? Is growth accelerating? Is it coming off a little bit? So looking at that job market, I think, is going to be pretty important.
And what's the general sense on the interest rate road ahead? Because we've already seen the Bank of Canada lower interest rates to address some of the economic worries. I guess there's a bit of a balancing act with a trade war in that, you want to be mindful of things like inflationary concerns and all of that. But if there are signs of a weakening economy, does it suggest that there could be more rate cuts coming for Canada?
I think that's certainly possible. And if we look at market expectations, both before and since the election, market is expecting a couple more rate cuts here in Canada for the rest of the year. Now, as you mentioned, we have cut rates significantly quite a bit. And so there is some element of stimulus, or at least not tight financial conditions in Canada. And so to the extent the trade war affects growth, we could see rates come down a little bit more. But with this result in the election, I think it's also possible that we don't see as many cuts as perhaps are priced in. The Liberals have promised a lot of spending, particularly in the first year or two. And so to the extent that gets passed and gets put through and implemented, that could support a weakening economy. And so if there's fiscal stimulus there, we might not need as much monetary stimulus. And so there's a possibility we see a little less on the front end in terms of those rate cuts. Now, that spending does have a cost to it. And in the long run, what we could actually see is higher, longer-term interest rates as the government continuing to borrow, continuing to run deficits with no real path back to a balanced budget. We think there's going to be a lot of government spending and, of course, a lot of debt issuance because of that. And we've already seen it in the US as well as other countries in the world starting to borrow a lot more as well. That could keep those higher end rates a little bit higher than what we've seen in the past.
And, when there's room in the news cycle, it's been so busy to talk about fiscal worries. It opens the door to what's our game plan? Can we grow the economy to offset some of those fiscal worries? And what was unique was we had both an election cycle, but also the trade tensions opening the door to a lot of people talking about policy ideas for Canada's future. And some of those are big ideas, they take a lot of time to implement. But from everything you've heard, regardless of party, what do you think would be the most sustainable ideas, meaningful ideas when it comes to actually growing the economic pie?
Yeah, and to your point, we've seen a lot of promises, both conservatives and liberals, leading up to the election with various ideas as to how to stimulate or try to get Canadians incentivized to invest back here in Canada. And there's been suggestions like an increased TFSA limit or no GST on autos or housing or things like that. I think a lot of those ideas make sense. And if we can come up with one or two of those type of strategies, I think Canadians have already shown the willingness to repatriate assets and invest domestically or reinvest those assets domestically, but it has to make sense. And I think, Canadians are prudent in where they're making those investment decisions. So to the extent the government can find a couple of those type of strategies to help Canadian investors make that decision, I think that could be a very important little policy tweak that can help, Canadian economy overall.
Okay, so some big ideas to watch for in what has already been a busy week. Chris, great to get your perspectives. Thanks so much.
Thanks for having me.
Global X Executive Vice President of Investment Management and Strategy, Chris McHaney. And make sure that you're subscribed to the Global X channel so you don't miss our next investing video. We'll see you next time.